Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription. For those of you who are new, welcome. This is my brief bio. My background is technology. We have a team of financial engineers that are building models using latest advances in artificial intelligence to spot opportunities in the market and provide signals, and then I use these signals in the live trading room environment. That's, I think, one of the main difference between Tradespoon and other services. Disclosures are very important. If you're new to trading, please read the disclosures. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's take a look at the market and see what happened. All right, so we had earnings from Adobe, JBL, Blink, Charging. Adobe is down 14%, trading at 492 level. In terms of interest rates, let's look at interest rates. We're basically retesting the year-to-date high, year-to-date high, and the last September high, right before the market, started pulling back. So I think that's an important level on the 10-year yield that will determine the next move in the market. So we're approaching FOMC decision, we're approaching ECB decision, and I would keep an eye on this level. So if we break above this level after the Fed decision or ECB decision, then I think it could be a more significant pullback. If interest rates are now overbought, right, if they roll over and get back to at least 4%, I think then the rally can continue. And similar price action in dollar, right? Dollar was oversold, it rebounded, it's retesting 200-day moving average. Again, very key important levels. I love this, Michigan sentiment, building permits. That's news that's going on, and then FOMC decision. So these are the important decision when it comes to dollar and interest rates. VIX is slightly elevated, right? It went up to 15 level. QQQ is sitting at the main support level, so it did break this uptrend. We've had these marginal pull breakdowns, 1, 2. I would look at the. We talked about positioning, right? We talked about positioning. 433 level is well defended for today, but I think starting next week, well, let's look. I think as we are going through the options expiration today, right? March contracts are rolling over. We have triple witching expiration, which also could lead to more pullback. So it's important to kind of look at the position. So let's look how QQQ is positioned. Dealer exposure, let's type in QQQ. Not sure why it's doing that. Okay. Zoom in, domain access. Zoom out. Okay, so it looks like this is April 15th, so that's going to be gone. March 18th, there is nothing. Let's look at April. Maybe that's the problem. Yeah, so okay. Zoom in, domain access. Zoom in, domain access. Okay, and zoom out or zoom in range. Range access. Okay. So that's April 19. Let's try March 18. That doesn't look like anything. Significance. Yeah, so for now, no. So it's kind of a vulnerable setup. So it looks like in terms of spiders, we have 500 level, which is pretty well defended. We're at 511, so 500. And in QQQ, March 15 is going to be gone, nothing, and then April 19. Okay. So the next level that has significant open interest is around 420. And 434 is expiring today. So that basically means that as of right now, this level is not really well defended on QQQ, right? Because it's defended for today. I think there were 434, 32 puts that are expiring today, but as they get closed and rolled over, it's an important level to watch, right? And potentially going into the FOMC decision on Wednesday, if positioning looks the same and there is negative news, we could be at 420, which at 420 level, I think you do have a little bit more put buying, right? 40,000 positive Venus. So there is a pretty well position at the 420. So that's I think that's the level I would watch. Today, you kind of have a rotation, right? What was working yesterday, what held the market yesterday was Apple, Amazon, Meta, and Microsoft, right? And then value stocks, interest rate sensitive stocks sold off. Today is the opposite, right? Today, you have mega cap technology stocks are pulling back, but then you have value stocks like Nucor and value in general are providing some kind of a support, right? XLF slightly up, BTV is up, Dow Jones actually down, but regional banks are up, utility, energy are up. So that provides support for the market. So that's good, right? Because it's not kind of a indiscriminate sell-off across all sectors. So you do have this rotation. QQQ is sitting at the important support. NVIDIA is actually turning positive, was able to defend this 850 level, right? Important 850 level and grinding higher. So that's what I would keep an eye on. And if you look at the weekly, let's go over. So NVIDIA basically neutral, right? No new signal in NVIDIA. Materials, new retesting all-time highs. So we were able to publish, push to the positive candlestick. Home builders, no new signal after Leonard is kind of engulfing candlestick. Metals and miners pull back on rising interest rates. China, no new signal. It's kind of for the past 4 weeks, it didn't go anywhere. It did make new highs, but then on this TikTok and politics, TikTok ban and retaliation from China potentially, FXI is basically back to this downtrend, so important level. Industrials, no new signal, kind of trading at the same level. Dollar recovered probably more than half of the losses from last week. Junk bonds are staying flat, not moving anywhere. You do have TLT giving up all the gains and more from last week on higher yield. Healthcare, no new signal, staying at the same level. Consumer discretionary with Tesla pulling back, making new lows. Retail sector, you have that kind of pulse breakouts, right? In XRT, right? It looked like it broke out and now giving up all the gains and sitting in this support level. Biotech, right? Looks the same way, right? It broke out and now sitting at the breakout level. And then IWM in general. So kind of everybody got excited, we're making new all-time highs, breaking out of this broadening the rally, and then now we're pulling back. Energy, XOP, very strong performance. It broke out of this trend and on its way to retest August highs, very close to that. So definitely, in crude oil got above 80, right? So you do have kind of a bullish momentum behind oil drillers and energy. Silver, very strong performance in silver. It's retesting November highs, and it's retesting May highs, right? We were looking at the positioning. There was very large open interest at 22 strikes and at 23 strikes. So it looks like we actually reached both 22 and 23. I think Bob asked how far can it go. I closed it near 22 level, but it's now at 23 level. So silver is a strong performer. Along with gold. Gold also had it had actually pulled back, but silver is doing a catch-up trade. That's about it. So the question is, in terms of positioning, if you zoom out 6 months, for the months of March, predicted 482 to be support, 520 overhead resistance. We're trading at 510. So going into the end of March, going into April, what did it predict for April? Actually 537. So March 520, April 537. That's the upside. The downside is 480. Right. So we're at 510. So 30 points to the upside, 30 points to the downside. Let's do that. On spiders, and in terms of positioning, right? Let's look at the positioning on spiders. You do have a pretty large position, relatively, 20,000, it's not huge, 525, and bigger, and it's growing, is 530. So you do have position at 530, and then you do have position at 500, and if 500 doesn't hold, which we're 2% away, 490. So it looks like 490, 485 is well defended. So I think it matches the neural network, right? That, worst case scenario, we can get to 485, 480 by April 19th. Best case scenario, we can get to, 530. Both levels are well defended, well positioned, and will probably gravitate toward those strikes based on the FOMC decision, right, and perception of interest rates. All right, so let's try that. I think 580, so maybe 20 points, that would 490, 25 points, so like 485, 480. Let's do 30 points, it's easier. All right, the 30 points to the downside versus 30 points to the upside, right? So neural network and positioning basically said 537 or 530, right? So let's call it 540. Going into the next earnings season, right? So by April 15th, are we going into 540? Because you know, Paul is going to say I'm a man of my word, and I'm going to lower interest rates. And the economy is expanding, GDP is growing, everybody has jobs, right? So that's 540. If Paul says, maybe I will lower interest rate, maybe I will not, but definitely not the first half of the year, maybe closer toward the end of the year. And, again, repricing of S&P, companies are not growing their revenue to support current evaluations, and we're down to 480, 30 points to the downside. So which event is going to happen first is between now and April 15. Are we going to get to somewhere between 530 and 540, or are we going to get somewhere between 490, 480, right, in terms of positioning and in terms of structure? So how many of you say, one, we're going to 540 by going into the next earnings season, and two, we're going into 480? Joseph, two. Thank you for participating. Rob, two. Louis, Mark, Martin, Michael, Patrick, Rick, Rob, Michael, Steve. Mark, one. Okay. Without ECB decision, it is a tough call. I'm going to go with one. I think I did it last week. I'm going to go with one. I think even if we have pullback, I think it'll be short-lived. I mean, obviously 480 is the worst case scenario, but I think 495, 500 is well defended. So I think, there's little room to the down, maybe 2-3% to the downside, and I think we could get to 540 or 530 by April 15th. The risks are obviously, the only risk I can see, well, outside of geopolitical risk and black swan events, the only risk I can see is that if Powell says something to the fact that we're not lowering interest rates in May, not in June, right? And then if he basically says the same thing, we're data dependent, we just need a couple more data points, January, February, hotter than expected CPI is, maybe a little deterrent, but not a big deal, then market will rally. If he says two months in a row we had inflation go up, we're not comfortable, lowering interest rates anytime soon, and if interest rates break out, well, yeah, then I think 480 is it's reasonable to assume that if we are above this line, right, if we're at 450, 460, then we could get, meaningful pullback. I would personally watch interest rates and the dollar. All right. How's the Adobe Iron Condor? It is not going anywhere. Can I change it to dollar? What is it trading at? 350. $5. Okay, so I did Iron Condor. So in terms of earnings strategy, in retrospect, probably should have done the same thing as it calls $10 spread instead of $500 stock. I should have done 10 or $15 strike. Then it would be worth. But The positioning did say that around 500 is where the largest position is, and we are trading at, where is Adobe trading? So that's an example of earnings strategy, 492. So I mean, we'll see, it's kind of it's gravitating toward 495 strike basically, instead of 500. So this is an example of earnings strategy. Low risk, right? I put on, put spread for 13 cents and call spread for 25 cents, and trying to, why is it not showing? Trying to close it for $1. Probably should have adjusted to 400, 500, and 510 next time. But it's an example of how you can take advantage of the earnings, right? And you can either be long volatility or short volatility. Because of triple witching expiration, I decided to be long volatility. Could have put a debit spread that would be a lot more expensive. Butterfly is a lot cheaper alternative. And we'll see if we can actually get a fill. So that's an example of earnings strategy. ExxonMobil, I'm out. It did get filled yesterday at 110.90. So you definitely see that of both stock and option trades as part of the elite service. So I encourage you to try to participate in live trading room. We have morning bell and closing bell as part of the elite service. And you can always go to SMS alert, enter your phone number, and either via Discord or via the phone, you can get text messages every time I trade. Right, so you have combination of both stock and option trades here. Any questions? Bob present. Okay. Where do I get these signals? Well, if you want to, so these signals you get from active trader, weekly trader, and monthly trader, right? So I try to every week give an example of one, right? Longer term trade, shorter term trade. So today, energy, right? So energy is dominating the signals. Most of the signals are in energy space for today's short-term signals. So we have Deere, Chevron, and CB and insurance, right? So this is a perfect example. Deere is up today. Actually, yeah, so it's good. Right, so Deere is up, Chevron is up, and you can see these trades. So did ExxonMobil last 7 days. So basically doing short-term trading, right? Bought at 100. I mean, I actually did example of both because the signal was there actually last week as well. So I closed the spread for 410. That was the a little bit longer holding time, a couple weeks. Where stock, I was looking for 0.5% profit, and in this example, what is it? Maybe 1.5% profit on ExxonMobil. And these are the signals that come from active traders. So you can trade them yourself, or you can participate in live trading room or watch the recording and see how I trade them. Right. So if you ever have a question, well, Chevron was never at 151.90 or it was never at 155.70, right? Then I would encourage you to watch the live trading room recordings or participate live, and then I can explain you the question. But the idea is that on short-term trading, I'm risking 1%, and I'm splitting the trades into two. right? Entry 1 and entry 2, looking for 1% stop loss, 1% gain, split into 2 trades. And one of the rules, I encourage everybody to keep a journal and have a checklist. Before you put on trade, have a checklist that basically says, do I have more than 4 active positions? If no, I mean, if you're new to trading, if no, then okay, you can proceed. And am I risking 2.5%, right? You can look at this, if you enter at this level and 1%, you basically don't want to be down more than $250, 2.5% of your account value. So $10,000, 2.5%, $250. If you're doing day trading, you need $25,000, and the idea is not to risk more than 1%, right? Some people say 0.5%, somewhere between 0.5% and 1%. If you're doing day trading, if you're holding position overnight, somewhere between, depending on your experience and how much money you manage, and somewhere between 1.5 and 2.5. But that's the most important. Become a disciplined trader where you document all the trades, you have your checklist, and then you don't break these rules, and then you grade yourself, right? Being honest with yourself. So I would encourage you to do that. Any questions? What is the floor for Adobe after the current breakdown? The floor? Well, it's hard to say where the floor is. If you look at the positioning, right? Yesterday's at positioning. I actually didn't get the Vanna, but charm is the same thing. So this, I mean, it's not the same thing. One is sensitivity to time, one is sensitivity to movement of volatility, but positioning, we're looking at positioning. So you do have a 495, right? So we did have 495. I mean, majority was at 500, right? At 500 and actually maybe 525. So I think the floor is at somewhere in this strike. I mean, you do have some positioning here, but relatively small. So at least as of right now, I think 485 is probably, line in the sand, well, session low, right? So Adobe right now, the session low is 488, right? 488, and potentially could gravitate to the 500 strikes. For now, there hasn't been big rebound, right? You can see. And plus, the idea is you do have triple witching expirations. So stocks like Amazon is at session low, Apple is at session low, Meta is at session low, Microsoft is at session low, and QQQ, it's off the lows, right? But still kind of hasn't closed the gap. So I would watch 433, 434. I think the puts that expire today have so there's some, because of the March expiration, there's some level of positioning at 433, and I think it will hold. If it does start breaking down below session low, like below 433, towards the end of the session, right? Because that's when institutions come in and they're going to rebalance and try to reposition, right? Going into the April expiration. If you see a breakdown in 433, I think it's going to pull the entire market. But at least for now, it doesn't look like 433 is going to be taken out. Model C is 436. So 433, and I think is well positioned. But again, it's triple witching expiration, especially towards the end of the session, it could get very volatile. How does gold look? That's another kind of mystery, right? I mean, it's not a mystery, but there are some people. There's a bond market, right, and there is a precious metals market, and there's an equity market. Well, at least gold is at all-time high, continues to break out. Silver is at multi-months, multi-quarters high, continues to break out. Why? Fear of inflation, right? That inflation is stickier for longer, so people are hiding in, Bitcoin, sorry, in gold. So I think that is the risk to the market. You can see Bitcoin already kind of dropped below 70,000 as well, right? Kind of reversing. So this red shooting star, not a good price. Assuming we're going to close below 70,000 today, that's not a good price pattern. And same thing happened to Nvidia, now biotech, IWM. So next week is going to be important, right? Next week, either everything is going to resume the breakouts, right? Or we're going to have a more meaningful pullback. A lot of it, I think, will depend basically on what Powell will say. So for now, gold and silver, my personal opinion that gold is going higher. As long as it's above 192, 188, it's a buy, right? If it pulls below that, then we need to sit down and think about it. But for now, it looks like a clean breakout. Materials and oil do look good. Yes, Bob is long XOP calls, nice trade, continues to go higher, cleared. There's not much overhead resistance until 154, and crude oil has been staying above 80 for a couple days. But again, still facing this downtrend. So I don't think it's a big green light, but at least in ExxonMobil, it's already kind of anticipating rising crude oil prices because ExxonMobil kind of vertically going higher. I think Chevron is similar, trying to break out. Okay. Any questions? So yeah, I would watch Bitcoin, I would watch Nvidia, right? I think that those are, the stars of this year rally. Nvidia 850, 840 is a very important support. Well, Bitcoin 70,000, right? That was the breakout, all-time high. So it was as low as 65, 66. So it was as low as 66,000 today. So if we break 66,000, then I think that is a good proxy for risk taking, right? And how much further can this rally go, at least short term, So that's active trader, right? Obviously weekly trader, monthly trader, same idea, is just if weekly trader implies different models optimized for a longer period of time. So instead of looking for 1% gain, you look for 2.5% gain. That means you invest less shares because you still want to risk only $250. If you want to hold something for a month, for a quarters, okay, it's monthly trader, same idea. Just because you're holding for a week or a month or a quarter, you don't want to risk more than 2.5% of your portfolio, right, per position. Because market could be at 480, right? If Paul says something negative, market could be at 480. So how do you hedge that? Well, you don't know what he's going to say. So then, one way to hedge is 4 positions, no more than 2.5%. Then, that's how you hedge in your overall portfolio. Any questions? Then Bob will only be a Bitcoin millionaire instead of a billionaire. It looks like it's losing momentum, right? It did break below this neckline, right? So maybe Bob should, buy some put spreads, right, to hedge his calls. Maybe it's a good idea buying a put spread. Or you only live once and you double down. No, I didn't say that. I'm gonna erase it. No, you shouldn't do that. Yeah, you shouldn't do that. You should trade what you see. If you see a certain pattern where, it's kind of for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, for the past 10 sessions, it basically didn't go anywhere, and it's actually dropped below this support, what used to be overhead resistance, became support. Now we broke below that. That's not a good. It's not a bullish price pattern. So I see a weakness in Bitcoin. If I'm a Bitcoin holder, then I would consider maybe trim the position or buy put spread. Right, kind of what I did was EWJ. Right, we're approaching ECB decision, Bank of Japan, BOJ. Right. I mean, vertical move to the upside gap, sitting on the support line. It breaks the support line because they are going to loosen up their low interest rate policy environment. At least short term, it could pull back to the 50-day moving average, right? In terms of positioning, we've seen there's a lot of put buying at 67 level at 50-day moving average, but there's nothing at 69. So this ECB decision or BOJ decision, I mean, it could be at 71 or it could be at 67. So you spend 1% of your position, 0.5% position, you buy a put spread, right? Just in case, right? So then, I have EWJ position, but I do have April 68, 66 put as well. All right. Any other questions? Bob, you did buy put spread yesterday that are doing very well. On Bitcoin, seriously? I didn't know you were going short. That's good. Okay. And you can see kind of General Electric similar price action. These are kind of a vertical move up, and then for the past 5-6 sessions not going anywhere. We did have a meaningful pullback on above average volume, right? So it shows you that there's at least consolidation going into important next week decision. Any questions? All right, so we talked about stock forecast toolbox, right? You can do 10 days, 6 months prediction. Again, between the neural networks and between positioning, I think this is a great way to find support and resistance levels, right? Support and resistance levels. So if you're day trading and you reach 433, we set 436, okay, then you know that probably 436 is now going to be overhead resistance and 433 is going to be your support. And you can zoom out to see predictions. So you can look at the company screener, right? We do have company screener, basically shows you which sectors are leading, like semiconductors, computer hardware like Dell, some of the financial services, internet companies, high beta stocks, material construction. So you can see which sectors are outperforming the market. So that's all part of the stock forecast toolbox. Research seasonal chart, right? Good. Seasonal charts basically shows you how much correlation there is to seasonality. I mean, it's a vertical move to the upside. Usually January, February is kind of bullish buys, but less bullish buys. So low correlation right now. And again, usually March sideways, and then, but starting end of March, after ECB FOMC decision, we either heading higher, just like seasonality usually shows, or if there is a negative surprise, we're heading lower, right? But usually towards the end of the March, it was anticipation of stronger April earnings, market rallies. So that's seasonality. You do have a probability calculator. People use that just to show you, okay, based on historical volatility, 500 is your support, 525 are your overhead resistance. So between now and April, 76% of the time, the market will trade between 500 525. So at 500, maybe buy. At 525, maybe sell or trim. So that's research tool, stock forecast. We talked about picks. In terms of portfolio that you can follow, my trading elite, right? You see everything: earnings, stock, option, trades. But Robo Investor, you only see stocks, spreads, or premium. You only see, spread. The spread trade that I do, like with ExxonMobil, and Shadow Trader, you basically see all of my trades, but you don't have access to the tools. We do have a YouTube channel. I encourage you to participate. On Wednesday, we have example of live trading room, so you can watch the live trading room, which is important. And that is, let's see, anything else I missed? Education, there's a lot of free education. So if you want to learn anything about trading, right, there's a lot of Strategy Roundtable recordings, active investor workshop recordings. You know, you can search for Greeks, right? If you want to learn about Greeks, hit enter, then you'll see a bunch of webinars on option Greeks, right? You know, throughout the years. So I encourage you to also review that. And then there are a lot of guides, right? Learning Center, if you want to, you know, technical analysis, introduction, options basic, advanced technical analysis, portfolio management, trading plan. So there are a lot of lessons you can find under the education. Bob, thank you. All right. Andre, Bob, Brian, Don, Jeff, Joseph, Louis, Mark, Martin, Michael, Patrick, Peter, Mark. All right. That's all I have for today. Unless you guys have any questions, I will see you either the closing bell or Monday morning. Thank you, Joseph. Thank you, Bob. Any questions? All right, guys. Thank you very much.